हेलो हेलो। माइक टेस्टिंग। हेलो हेलो हेलो। लेटेंसी कितना है? 10 सेकेंड। वीडियो में ना इसका जो स्क्रीन का डलनेस आ रहा है, मतलब अच्छा वो वाली है ये, ठीक है, वो तो ठीक है ना। हाँ, नहीं टीवी में तो सही आ रहा है, ब्राइटनेस बैकग्राउंड में जो मेरे लोगो दिख रहा है वो सही आ रहा है, लेकिन ब्लू पोर्शन थोड़ा सा लाइट था। ये जो ब्लू आ रहा है ना ये मेरे, हाँ ठीक है, उसकी वजह से डन डन। हाँ सर, चेक कीजिएगा एक बार, लाइव किया है। हाँ, पीपीटी शेयर कीजिएगा, उधर से ही कर दीजिए आप। कोई भी पीपीटी दिखा दो यार। 7-8 सेकंड का डिले आएगा सर। आपने, हाँ जैसा आपको फीड मिले, मैं सारे माइक्रोफोन से एक बार टेस्ट कर ले रहा हूँ। हेलो हेलो। माइक टेस्टिंग। 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 हेलो हेलो। हेलो हेलो, माइक टेस्टिंग, हेलो हेलो, माइक टेस्टिंग, हेलो हेलो, हेलो हेलो, माइक टेस्टिंग, हेलो हेलो। अपन ऐसा नहीं कर सकते, ये जो पिक्चर इन पिक्चर आ रहा है दो बारी है, जिसकी वजह से वो बैक वाली साइड डार्क आती है, कैमरा का एंगल वगैरह चेंज करना। सर एलईडी पीछे तो आएगा ही, अगर उसको टेली करोगे तो नाम है ले लिया वो छूट जाएगा। पर पिक्चर इन पिक्चर आएगा तभी टेली करा सकते। नहीं, अगर कैमरा का एंगल थोड़ा हम्म, हाँ, ठीक है, जूम इन कर लोगे थोड़ा ठीक रहेगा। ये हाँ, राइट साइड से थोड़ा सा खत्म हो गया, ठीक है। नहीं नहीं, देखिए जब स्पीकर बोल रहा होगा, जब स्पीकर एक बार दिखाया उसके बाद थोड़ा सेम सेटअप आप कर लेंगे ना तो अभी ठीक लग रहा है। अब पिक्चर इन पिक्चर का थोड़ा सा ही फ्रेम आ रहा है, कोई दिक्कत नहीं है। यहाँ बैठ, देखिए यहाँ का जो स्पीच होगा वो तो मुश्किल से 5-7 मिनट है, बाकी इंटरेक्शन तो वहीं से होना है। वहाँ का तो बढ़िया ही है। हेलो हेलो, हेलो हेलो, हाँ यहाँ से तो बिल्कुल बढ़िया आ रहा है, कोई दिक्कत नहीं जरा सा भी। परफेक्ट। ठीक है, डन। अभी ऐसा कीजिए, प्राइमरी सेकेंडरी आपने कन्फिगर कर दिया है? हेलो हेलो। हाँ जी, हाँ जी रोहित। हाँ, ट्राइडेंट में ही हूँ। आ गए टेस्टिंग के लिए, मैं ऊपर ही हूँ, आ जाइए। हाँ, हो गया टेस्टिंग ना, लाइव भी चल रहा है, वो जो लिंक आया है ना उस पर आप क्लिक करके चेक कर लीजिए, अभी लाइव हो रखा है। ओके। हेलो हेलो, ये सही है, डन। अब इंटरनेट की टेस्टिंग के लिए वो दोनों कॉन्फ़िगर करने थे ना इस लैपटॉप में, लिंक प्राइमरी सेकेंडरी, वो वाला काम भी करा लीजिए, हम लाइव पे ही एक बार चेक कर लेते हैं। नहीं, दो लैपटॉप में है ना अभी तो, इसी इसी लैपटॉप पे जिस पे ये लाइव कर रखा है हमने, उसी पे सेकेंडरी लिंक को भी सेकेंडरी नेटवर्क ऐड करके एक बार केबल प्लग इन करके चेक कर लेते हैं। देख लेते हैं ना लाइव में कितना डिले आएगा इनके वर्स्ट केस सिनेरियो।
It's my pleasure to host Gail Senior Management. The Gail, of course, needs no introduction. India's premier company in the energy value chain. Today, to discuss the 4Q FY24 as well as FY24 performance, we have the senior management team of Gail. During the discussion, they will not only share the performance highlights of the year gone by, but also share some insights into how FY25, 26, etc. are looking. And of course, subsequent to that, the floor will be open for Q&A. The management is represented by Shri Rakesh Kumar Jain, Director of Finance. Shri Jain is a cost management accountant by profession. He has rich and varied experience of around 32 years working in oil and gas sector and as a regulator. Prior to his appointment as Director of Finance, he has held position of ED, F&A, HOD in GAIL. He also holds position of Chairman in Indraprastha Gas, GAIL Global USA, amongst other companies. Besides serving a long tenure at GAIL, he was on deputation to PNGRB as a sector regulator. During his stint at PNGRB, he was actively engaged in review of tariff regulations, the most critical thing, conceptualization of unified tariff, authorization of CGDs in 9th and 10th round of bidding. Next, we have Shri Sanjay Kumar, Director Marketing. Shri Kumar is a graduate in Mechanical Engineering from IIT KGP. He also holds an MBA. He joined GAIL in 1988 and subsequently has grown up the ranks, working in various functions such as gas marketing, CGD business, LNG sourcing, shipping, business development, transmission, and so on and so forth. This cross-functional experience has enabled him to gain deep insights into all aspects of GAIL and the entire value chain. Before assuming the charge of Director Marketing, he was Managing Director of IGL, one of the largest city gas distribution companies in India. Presently, apart from being member of board of GAIL, he is also chairman of GAIL Global Singapore, Kokan LNG Terminal, Bengal Gas Company, amongst other companies. Please welcome. We also have Shri Shashi Menon, ED Finance. He joined GAIL in the year of 1992. He possesses enriched experience of over 3 decades in oil and gas sector. He is Head of Finance and Accounts at GAIL. Please welcome Mr. Shashi Menon. And last but not the least, Shri Praveer Kumar Agarwal. He is BTech in Electronics and Communication from IIT Kanpur and also holds an MBA degree in Marketing Management. He joined GAIL in the year 1989, my apologies, and carries over 30 years of experience in marketing, CGD, joint venture functions, and so on and so forth. Currently, he holds position of Director in Central UP Gas Limited while occupying the post of ED Marketing in GAIL. Please welcome Mr. Agarwal. I'd request Shri Rakesh Kumar Jain to make opening remarks and begin the proceedings. Over to you, sir.
Thank you, Harsh. A warm good afternoon to everybody, and heartening to see you in such a large gathering. It's always wonderful to meet you all. Yesterday, GAIL has announced its annual results for 23-24 and Q4 financial year 24. Just to give brief highlights of those results, of course, you must have gone through our results through website and also SEBI website. But just to take you through those results. On a yearly basis, GAIL clocked the turnover of rupees 1,30,284 crore against rupees 1,43,976 crore in financial year 23, a decrease of 10%. and this decrease is mainly on account of softening of natural gas prices. However, this decrease has been partly offset by increase in our volume in marketing, transmission, petrochemicals, etc. The PBT increased by 75% to rupees 11,555 crores as against rupees 6,584 crores, and PAT by 67% to rupees 8,836 crore against rupees 5,302 crores last year. The robust performance during financial year 24 is primarily driven by better physical performance across all major segments. On a yearly basis, consolidated turnover in financial year 24 stood at rupees 1,33,130 crores as against rupees 1,45,531 crores in last year. The consolidated profit before tax up by 74% in current financial year to rupees 12,595 crores as against rupees 7,256 crores in financial year 23. The PAT increased by 76% to rupees 9,899 crores as against rupees 5,616 crores in last financial year. During the year, company has paid total dividend of 5 rupees 50 paisa per share, amounting to rupees 3,616 crores. Now I will take you through the quarterly performance highlights. For Q4 24, the gross turnover stood at rupees 32,250 crores in the Q4 as against rupees 34,168 crores in Q3 financial year 24, and there is a decrease of 6%, mainly due to decrease in price of RLNG in natural gas marketing segment. The profit before tax for the quarter stood at rupees 2,842 crores as against rupees 3,694 crores in Q3 financial year 24, mainly due to lower trading margins in gas marketing segment, lower dividend income, and increase in depreciation cost due to additional capitalization and revision in residual value of underground pipelines. The PAT during the quarter stood at rupees 2,177 crores as against rupees 2,843 crores in the Q3 of financial year 24 for the regions indicated. Consolidated financials for Q4 as compared to Q3 financial year 24, the consolidated turnover in the current quarter stood at rupees 32,744 crores versus 34,678 crores in the previous quarter, down by 6%. The PBT in the current quarter is rupees 3,099 crores versus 4,075 crores in Q3 financial year 24, down by 24%. The PAT is rupees 2,469 crores versus 3,195 crores in Q3 financial year 24, down by 23%. Before I take you through the physical performance, I would like to inform you that GAIL board has approved laying of C2, C3 liquid pipeline from Vijaypur to Auraiya, having estimated project cost of 1,792 crores and with a commissioning period of 32 months. This project will enhance the feedstock availability at Pata petrochemical plants, which in turn augment capacity to almost 1 million ton of polymer and also reduces energy consumption and carbon footprint. Now I will take you through the physical performance. The physical performance on yearly basis, gas marketing volume stood at 98.45 MMSCMD in the current year as against 94.91 MMSCMD in financial year 23. Natural gas transmission volume stood at 120.46 MMSCMD in the current financial year as against 107.28 MMSCMD in financial year 23. Polymer production stood at 777 TMT as against 442 TMT in financial year 23. LSC production stood at 996 TMT as against 934 TMT. LPG transmission stood at 4,396 TMT as against 4,335 TMT. In terms of quarterly physical performance, gas marketing volume stood at 99.99 MMSCMD in current quarter as against 98.14 MMSCMD previous quarter. Natural gas transmission volume stood at 123.65 MMSCMD in quarter 4 as against 121.54 MMSCMD in previous quarter, that is Q3. The capacity utilization was 59%. Polymer production stood at 248 TMT as against 205 TMT in last quarter. LSC production stood at 265 TMT against 249 TMT in previous quarter. LPG transmission stood at 1,114 TMT as against 1,095 TMT in previous quarter. As you know, GAIL has also 6 CGD directly in its fold. Now I will take you through the infrastructure and the performance of those CGDs. GAIL is having infrastructure of 189 CNG stations and 3,42,948 DPNG connections as on 31st March 24 in the 6 GAs allotted to GAIL. During the current quarter, that is Q4, 24 new CNG stations and 52,897 new DPNG connections were added. The physical volume for Q4 for these 6 CGDs were 0.33 MMSCMD. In next 2 years, GAIL targets to add over 80 new CNG stations in 6 geographical areas, just I shared with you, and 1,50,000 new DPNG connections. Now I will take you through the performance highlights of our own 100% subsidiary, that is GAIL Gas Limited. During financial year 23-24, turnover of GAIL Gas stood at 10,944 crores as against 10,530 crores in financial year 23. There is increase of almost 4% in turnover, and this increase is mainly on account of increase in volume in CGD segment and CNG and PNG by 16% and increase in bulk trading volume by 19%. PBT for GAIL Gas increased to rupees 434 crores as against 400 crore in financial year 22-23, an increase of 9%. PAT increased to rupees 323 crores as against 297 crores in financial year 22-23. The physical volume during financial year 23-24 increased to 6.46 MMSCMD from 5.69 MMSCMD in financial year 22-23. Now I will take you through the highlights for quarter 4 for GAIL Gas. Cross turnover stood at rupees 2,853 crores as against rupees 3,154 crores in Q3 financial year 24, decrease of 10%, and this decrease is mainly on account of decrease in bulk trading volume by 9% and industrial by 4%. Profit before tax stood at rupees 121 crores as against rupees 154 crores in Q3 financial year 24. PAT stood at rupees 92 crores as against rupees 113 crores in Q3 financial year 24, down by 19%. The physical volume decreased to 6.88 MMSCMD in Q4 financial year 24, decrease of 4%, mainly on account of decrease in bulk trading volume by 9% and industrial volume by 4%. During financial year 24, 94 new CNG stations and 68,695 new DPNG connections were added. During financial year 24, 114 new CNG stations and 110,103 new DPNG connections were added by GAIL Gas. During Q4 financial year 23-24, GAIL Gas, along with its joint ventures and subsidiaries, added 63,164 new DPNG connections and 79 CNG stations having infrastructure of 9,76,000 GAIL Gas and its group companies. DPNG connections and 570 CNG stations. There is another subsidiary of GAIL which is Bengal Gas Limited. As on 31st March 2024, Bengal Gas Company Limited has installed 20 CNG stations, laid 267 km of pipeline, added 5124 DPNG connections. During the Q4, 7 CNG stations were added and 30 km pipeline were also installed. Now I will also take you through the project performance, the projects which are taken up by GAIL. Mumbai-Nagpur Jharsuguda pipeline. As you know, this pipeline is of 1,755 km. Activity for laying this pipeline are in full swing, and this pipeline in totality is expected to be completed by October 24, and Mumbai-Nagpur section of this pipeline is likely to be completed by June 24, that is next month. Regarding Jagdishpur Haldia Bokaro Dhamra pipeline, this pipeline is of 2986 km this pipeline is of 3289 km. Out of that, 2986 km of pipeline have been commissioned, and remaining part, that is Durgapur Haldia pipeline, is expected to be completed by next month, that is June 24. Shirkakulam Angul pipeline, this pipeline is of 420 km. Work is under progress and likely to be completed by next month, again June 24. Spur lines are anticipated to be completed by September 24. Gurdaspur Jammu natural gas pipeline. This pipeline is having a length of 160 km and likely to be completed by July 26. Dhamra Haldia pipeline, this pipeline is of 253 kilometers of length, and this is Odisha section have been completed, and remaining part is expected to be completed progressively by again next month, June 24. Now I will take you through the other projects which GAIL is taking up. PDH-PP at Usar, this capacity of this plant is 500 KTPA, project cost is 11,256 crores, completion date April 25 next year. PP at Pata, this capacity of this plant is 60 KTPA, project cost is 1,299 crores, completion date by December 2024. IPA at Usar, capacity of this plant is 50 KTPA, project cost is 530 crore, completion date by December 2025. GAIL Mangalore Petrochemicals Limited, as you know, this plant we have acquired through NCLT process, erstwhile JBF Petrochemicals. Capacity of this plant is 1250 KTPA, project cost is 4,200 crore, and plant again is expected to be completed by March 2025. Total capex for financial year 24 is rupees 11,425 crore, and mainly on pipelines, petrochems, CGD projects, operational capex, equity contributions, etc. Now I will take you through the segmental outlook for short to medium term. Natural gas transmission, as you know that, and I shared with you just now, average transmission volume for 23-24 has been 120.46 MMSCMD, and this is in line with the guidance which we have been giving, like 119 to 120 MMSCMD, which has actually exceeded those to 120.46. Now we expect that in coming 2 years, that is this current financial year 24-25 and 25-26, our volumes are likely to increase by 10 to 12 MMSCMD on per annum basis. That's how we are expecting that this year we may end up with average volume of 130 MMSCMD to 132, and then 25-26 may be achieving around 140 to 142 MMSCMD. Gas marketing volume. Gas marketing business has exhibited robust performance due to better arbitrage and various optimization measures like destination swap, shipping optimization, time swaps. GAIL clocked gas marketing profits of almost 6,000 crore, to be precise 5,966 crores, including one-time custom duty receivables of 155 crore during financial year 24 24, and which is in line with our guidance, which we revised during Q3 results of Q3 in earning call to 5,500 crore. Now we have actually achieved 5,966 crore. In terms of next year's guidance, we expect that we'll earn marketing margin in the range of 4,000 to 4,500 crore at least. For the gas marketing volume, we expect the gas marketing volume to increase from current level of 98.45 MMSCMD to 105 MMSCMD during financial year 24-25. Polymer production, as you know, that petrochemical plant has done significantly better as compared to last year, and we have been giving through our various guidances that this financial year we will end up almost at break-even level, and through financials you must have known that we are almost at break-even level. In terms of performance, production stood at 777 TMT as against 442 TMT last year. During the year, we also earned gross margin of, that is EBITDA level, 421 crore as against negative gross margin of 508 crore in financial year 23. Petrochemical segment, mainly due to optimization of inputs, improvement of operational efficiency, these results have happened. Further, during next financial year, we expect that petrochemical plant will run at a normal level, that is around 810,000 ton, which will be more than this year, and we are likely to earn a normal or reasonable amount of profits during 24-25. LSC production stood at 996 TMT as against 934 TMT in financial year 23 and posted a PBT of rupees 769 crore during financial year 24. GAIL is also effectively involved in LPG hedging to protect our margins. Basically, we time to time see how the futures of propane and butanes are trading, and we lock our margins so as to give a reasonable stability to our profitability. Renewable energy, GAIL has a very modest presence in renewable energy. Currently, we have 134.7 megawatt of alternative energy, out of which 118 megawatt is wind energy projects and 16.7 megawatt are solar energy projects, including smaller units. Company has set a target for itself for setting up 1 to 3 gigawatt of renewable energy by 2030. That is additional 1 gigawatt by 2025 and another 2 gigawatt by 2030. This is all from my side, and thank you very much once again for joining us here, taking interest in GAIL. Thank you.
I would request the officials of GAIL to take ahead the proceedings through presentation. Anjana ma'am, please.
Good afternoon. On behalf of GAIL, I welcome all the investors and analysts to this meet for results of FY 23-24. So this is the safe harbor statement. Moving ahead. Mission of the company is enhancing quality of life through clean energy and beyond, and be the leader in natural gas value chain and beyond with global presence, creating value for stakeholders with environmental responsibility. So this is our company's vision. This is the broad outline of the presentation. We'll start with company overview, take you through the performance highlights, then we'll have a look at the industry outlook and strategy. Company overview, major business portfolios. So GAIL is having 16,240 kilometers of NG pipeline network and a long-term portfolio of 15.5 MMTPA of natural gas. In petrochemicals, we have a capacity of 810,000 tons at Pata and 280 tons KTA at BCPL. In the LPG and liquid hydrocarbons, we have 5 processing plants with a total capacity of 1.4 MMTPA and 4.58 MMTPA of LPG transmission capacity. In the ENP, we have participation in 13 blocks and presence in US and Myanmar. Renewables, we have a total renewable share of 135 megawatt, including wind and solar. GAIL is present in 72 GAs out of total 307 GAs through its own and with associates and JVs. So this is our global presence. We are present in Russia, US, Egypt, Singapore, Myanmar, and China. This is the shareholding pattern of GAIL as on 31st March 24. Out of total paid up equity share capital of 6,575.1 crores, 51.52% is held by Government of India, President of India. 14% is by FPIs, and rest is by banks, mutual funds, oil PSUs, LIC and others. The market cap of the company as on 31st March 24 stood at 1,19,108 crores. GAIL's market cap crossed 1 trillion mark for the first time, and share price touched all-time high of 196 rupees 35 paise on BSE during 23-24. During 23-24, GAIL paid a dividend at the rate of 55%, total 3,616 crores, that is 5 rupees 50 paise per share. Moving on to performance analysis. Major highlights of FY 23-24. GAIL secured an excellent MOU rating for FY 22-23 from DPE. GAIL's asset and market cap surpassed 1 trillion mark. GAIL paid a dividend of 55% of the paid up capital for FY 24. We received nil comments from CAG for the accounts of 22-23, that is 14th in a year in a row. GAIL achieved highest ever annual gas transmission volume of 120.46 MMSCMD. GAIL has entered into long-term agreement with Messrs. Vitol Asia and ADNOC LNG for an aggregate volume of approximately 1.53 MMTPA of volumes starting 2026. We achieved highest ever total annual LPG transmission volume of 4.395 MMTPA in 23-24. GAIL Vijapur secured first position with National Award for Excellence in Cost Management from the ICMI in manufacturing sector. GAIL signed an agreement with BPCL for 15-year supply of propane for upcoming petrochemical plant at Usar. GAIL was conferred with Authorized Economic Operator AEO Tier 3 status, which is the highest level of accreditation. Qatar Energy LNG and Petronet LNG Limited, they signed an LNG SPA of 7.5 MMTPA in February 2024, out of which 4.5 MMTPA is for GAIL. GAIL's credit rating: domestic AAA with stable outlook, international Baa3 with stable outlook Moody's, and BBB negative with stable outlook Fitch, that is capped to sovereign rating of India. Moving on to physical performance. We sold a total volume of 98 MMSCMD as against 95 MMSCMD in FY23, and we transmitted a total volume of approximately 120 MMSCMD in FY24. Petrochemical sales were stood at 787, which is back to normal levels. Liquid hydrocarbon sale stood at 998,000 tons. LPG transmission was 4,396,000 tons, which is showing a rising trend. And the gas marketing mix, 38% is my APM. Then we have RLNG, spot, midterm, and overseas sales, which we are making. Similar is the gas transmission mix, which includes my domestic gas and RLNG. In the natural gas sector, sector-wise supply, 44% is my domestic gas, and last year in FY23 there was a mix of 44% domestic and 44% RLNG, and 13% was my overseas sales, out of which major chunk was consumed by fertilizer, 38%, power 10%, and CGD 25%. The mix has changed to 51% is RLNG, 41% is domestic, and my overseas sales has gone down to a number of 8%. Overseas sale is shifted to domestic market due to increased demand by fertilizer, power, and CGD sectors. The fertilizer demand has increased, so is the power and CGD demand. Over to financial performance. My turnover is down from 1,43,976 to 130,284. However, my EBITDA margin is up by 66%, PBT is up by 75%, and PAT is up by 67% to 8,836 crores. These are some of the one-off transactions for FY23-24. In the gas marketing segment, there is a positive one-off of totaling to 234 crores of some indirect tax refunds. In my gas transmission segment, there is a negative one-off of 346 crores on account of we booked a higher price gas and some provisioning we made in some cases. In petrochemical segment, there is a positive one-off of 178 crores, and others segment, there is a negative one-off of 110 crores. This is how my balance sheet looks like as on 31st March 2024. The total assets stood at 1,09,528 crores. Non-current assets worth 91,000 and current assets totaling 18,528 crores. Capital employed stood at 85,446 crores. My net worth stood at 56,131 crores, and long-term loans outstanding were 13,513 crores. Moving on to key financial ratios. My PAT to net worth jumped from 10 to 16%. Return on capital employed rose from 10 to 14%. Debt to equity ratio stood at 0.29 times. My share price was at 181 as on 31st March 2024. Earning per share increased from 8 to 13 rupees per share, and my market capitalization was 1,19,108. My financial performance, overall financial performance, consolidated basis. My turnover stood at 1,33,130 as against 1,45,531 crores. My gross margin increased from 10,323 crores to 16,986 crores, and my PBT increased from 7,256 crore to 12,595 crores, an increase of 74%, and my PAT increase was 5,616 to 9,899, an increase of 76%. This is the revenue reconciliation on consolidated basis. this includes Gail and other associates revenue, which is after elimination, it is 1,33,500 crores. And similar is the PAT reconciliation with our JVs and associates. After fine adjustment, consolidated PAT 9,899 crores. This is my capital expenditure profile. In FY 23-24, there was a total capex of 11,426 crores, out of which around 30% is on pipelines, 30% is on petrochemicals, and another 29%, 30% is on operational capex, equity contribution, and others. And my projection for next year is around 11,500 crores, out of which 2,650 crores on pipelines, 5,200 crores on petrochemicals, and 2,100 crores on equity contribution, operational capex, and others. This is my ongoing projects, major projects which are ongoing. Some are commissioned, some are ongoing. So there are main 5 pipelines we are expecting to be commissioned in this financial year. Durgapur Haldia pipeline, Dhamra Haldia pipeline, KKMBPL 2, Sirkakulam Angul pipeline, Mumbai Nagpur Jasugoda pipeline, and another 610 KTA petrochemicals project at Usar and Pata. They are under various stages of project execution, and total approved capex on this account is 13,000 crores for ongoing projects. GAIL is included in FTSE Good Index 4 series for the 6th time in a row, affirming the company's strong commitments towards environmental, social, and governance practice in oil and gas sector. We have target to be net zero by 2040, and we are actively taking steps towards ESG. This is our CSR initiatives. We have Unnati, GAIL Unnati, Saksham for differently abled. We have Arogya for health and sanitation. We have Ujjwal for education. We have Harit for environmental. Then we have Kaushal for skill development. And Sashakt, this is towards women empowerment. We spent a total of 175.71 crores under CSR initiatives for FY 23-24, which amounts to 2.4% of our last 3 years' average profits. Our major CSR highlights are 210 meritorious and marginalized students received residential coaching at GAIL Utkarsh centers at Kanpur, Varanasi, and Haldwani. GAIL Kaushal, 760 candidates trained at GAIL Institute of Skill at Rajamundry and Guna. 229 candidates were trained in plastic product manufacturing. GAIL provided support to 536 candidates at Skill Development Institute at Raebareli. 40 mobile medical units operated across 22 districts in 11 states of India. Further, GAIL is supporting the hospital extension at Badrinath Dham. And in FY 23-24, GAIL's CSR has supported and impacted more than 10 lakhs lives through CSR initiatives. Now we'll take you through the industry outlook, and I'll request Mr. Praveer to take you through the industry outlook.
Good afternoon. I welcome all of you to this investors and analyst meet on behalf of GAIL warm welcome to you. I'll take you through the industry outlook of natural gas segment. Next, please. So, we find that the global energy system is evolving. Continuously across the world, new energy policies are, every country is thinking of new policies. The transition to zero carbon technology is going on. Energy security concerns are there because of various geopolitical concerns also. And of course, there is economic and population growth, which is also going to drive it is going to result in further evolution of global energy balance. Some tensions in energy markets have receded recently, but however numerous risks still remain, and the current relative calm may not last. Continuing fighting in Ukraine and risk of protracted conflict in Middle East, and also periods of extreme weather, major hazard, they're all major hazard for energy security. The pattern of investments in recent years, they are towards more electrified, renewable-rich energy systems. Energy transitions do not bring an end to traditional risks, and so global oil and gas trade is increasingly focused on flows between Middle East and Asia, and find that there are risks in this region in transportation of LNG. We find that energy security is a vital element for fuel importing countries, and similarly the industrial strategies and clean economy vision are equally important. Natural gas is a key bridge fuel for renewable energy mix transition and will continue to play a crucial role in energy security. If we look at the gas demand, we find that the buyers pursue long-term supply for energy security, and there was upswing in contracting. If we look at the graph, we find that in last 2-3 years, there were more of long-term contracts, and shows the industry's commitment to LNG. Milder winter, high gas storage levels, modest economic recovery in China, and lower demand in Europe, they all help balance the global gas market during 2023. Lower spot prices, increased buying in more price-sensitive markets throughout Asia. So whenever the spot prices go down, there is increase in price-sensitive markets, and there is limited new supply, which has kept the prices high. So there is a delicate balance between these two. Starting 2025, we find that there will be good surge in new LNG projects, and it is set to tip the balance of the markets and concerns about the natural gas supply. It is expected that almost 250 BCMs of new projects will be added. The liquefaction capacity will be added by 2030, and out of these, more than half of new projects are either in USA or Qatar. We also find that there is going to be declining domestic gas in some of the Asian countries, and also there will be growing power demand. So basically, the gas consumption in South and Southeast Asia will be increasing with time. So the global LNG market will continue growing into 2040s, and maybe later than that, and mostly driven by industrial decarbonization and in strengthening demand in Asian countries. Now we come to just give me a minute. The primary energy mix, if we look at that, we find that the gas is around 54 MMSCMD. So It is around 6.45% and it is around 54 MTOE. So, and it is slated to increase in future, and as we expect that it might grow up to 15% in future. So the Indian energy scenario, we look at it, the decarbonization target is 2070, 500 gigawatt non-fossil fuel based power generation capacity is there, and energy self-reliance by 2047, that is what we are targeting at. So energy demand in India is growing rapidly, and primary energy consumption is expected to more than double by 2050. So as we find that as the country grows and as people get more disposable income, the energy demand continuously grows. And that if the basket of energy will grow, and if within that the part of natural gas will further grow, so it will bring a lot of growth to natural gas sector. Energy demand in India is growing rapidly, and primary energy consumption is expected to more than double by 2050. India's role in global oil markets is expected to expand substantially towards 2030, with significant implications for its oil trade balance, climate ambitions, and energy security goals. So there will be healthy economic expansion and dynamic population, urbanization, and industrialization growth. So as industries grow, the demand for gas will also grow. India's growth critically depends on energy security. India's expenditure on energy imports is at present around 20% of the annual budget. Our growth to the world transition is so energy ecosystems. So basically, what is happening is that the cost is linked very close to the growth of gas. The government has made considerable headway with energy reforms and continues to focus on greater energy security, infrastructure development, and market liberalization. Now, this is about the historical scenario of gas. There's been sort of muted growth. Last year, FY24, we saw almost 187 MMSCMD of gas consumption across India, and we can say almost 50% of it was imported gas and 50% was net domestic production, which included the recent addition of HPHT gas, high pressure, high temperature gas from KG Basin. And if you look at the sectoral breakup of this, we find that fertilizers are the major consumers, and then apart from that there are other sectors like power, CGDs, and others. And we find that there is the CGD sector is the main growth driver, and it is expected that the growth in that sector will be around 20% or more, depending on the policy interventions. If we look at natural gas consumption in India, India is the 4th largest LNG market and will be one of the biggest drivers of future LNG demand growth, although we are almost 15th in total gas consumption in the world. But in LNG market, we are 4th largest in the world. And Indian buyers announced almost 11.65 MMTP of sales purchase agreement since 2023. Part of it was mentioned by in the last presentation, and that was about that 7.5 MTPA contract which was signed by PLL. So recent signings have narrowed the gap between contractual supply and demand, increasing demand and peaking domestic gas production, and there is need for more term deals to reduce exposure to spot market. So as and when we find that growth is there, we'll go for more deals, and there is a requirement of more long-term deals to reduce the exposure to spot markets. India's Current policies focus on fuel switching through promotion of natural gas. Government is making all efforts to improve affordability of natural gas. You might have heard about unified tariff. So unified tariff is there in the pipeline transportation. So what happens is, if the distance is beyond a certain limit, if it is more than 1200 kilometers, the cost of transportation remains same. So there are 3 zones. Up to 300 kilometers there is a particular rate. From 300 kilometer to 1200 kilometer there is another rate, and from 1200 kilometer onwards the rate is same. So that so all those regions which are very far away, the tariff will remain same if they are beyond 1200 kilometers. So apart from that, the natural gas pricing was linked with the crude oil prices for the domestic gas, and so that there is significant decrease of prices for PNG for household and CNG for transportation. Also, government mandated HPST gas. They gave a certain set of guidelines wherein they prioritize the CGD sector and their bids for their own CNGT and PNGD consumptions. And then it was the second priority was to fertilizer plants, and then LPG producers and power plants. So, and also they capped traders' margin to restrict hefty margin being charged to downstream customers. So all these things and several other things are being done by government to improve affordability of natural gas for Indian customers. Domestic gas production is witnessing a rising trend. So the HPST gas, we find that further growth is anticipated with more fields expected to come online and increased availability of domestic gas. It will improve, it will reduce basically the import quantities. And also we find that a lot of gas is available in northeast, which we expect to come to be used, more of usage for that gas will be there in future, near future. Now, we find that India, one nation, one grid concept is increasingly being brought to reality. We find that with the green lines, when they are actually laid, so almost all of India will be covered through various crisscross pipelines, and there will be a more robust grid. Already there is a grid kind of thing wherein the gas supply is done through various sources, and one kind of gas can travel to other parts of the grid. But going forward, the connectivities are going to increase, and which will result in better reliability of gas across India. If we move to the next part, we find that in city gas distribution, very good ecosystem has been made. Entire India, we look at the green part, it was almost 300 geographical areas were awarded to various entities, and then in 12th round, remaining 7 GAs were also, so almost 100%, 99% we can say, land of India has been awarded. It has, so various geographical areas have been made, and they have been awarded to various entities across India, and each of those entities are working for their segments, basically 4 segments, PNG domestic, CNG transportation, and C&I, commercial and industrial sectors. So they are all working on those sectors. CNG stations, almost 6,000 CNG stations are there, which are slated to grow to 18,000 till 2030. And DPNG connections, almost 1.25 crore connections are there, which may increase up to even 10 times of that in next 5-6 years. So with increased focus of government on CGD sector, it is expected that the growth will be there, as I said, maybe more than 12% of that, and we will be beneficiary of that because we are also sort of wholesaler to them. We supply to the gas to most of these CGD entities, and also we are having almost 72 GAs through our own companies, subsidiaries, and joint ventures. Now coming to petrochemical business outlook, India's per capita consumption of plastics is just 14 kg versus China's per capita consumption of 83 kgs. So you can see how much potential is there. World average per capita consumption is also 39 kgs, while US consumes as high as 93 per capita. So we are at 14, world average is at 39, and China is at 83, USA is 93. So a lot of growth potential is there in petrochemical business. It is the India's per capita consumption is even the lowest in Asia. Future polymer demand growth in India is estimated at 8 to 9% per annum. Indian polyethylene and PP market grew at 18% and 8.5% respectively in 2023-24. We sold almost 1,000 KTA of polymers, out of which around 800 KTA of Gail and 250 KTA of BCPL. We market that quantity. The polymer capacity enhancement is under progress, and the details have been given by the management. And also, we will be doing a lot of diversification in PTA, etc. So, growth drivers are there for petrochemical business. So because of per capita consumption being low, as well as a lot of capacity addition which is being done, so it is expected that there will be good growth in top line as well as bottom line for GAIL. Now coming to next part, we find that in biogas, GAIL is doing quite well. We have already given almost 403 letters of intents to various companies, and also we are market leader in biogas through our innovative CBG-CGD synchronization scheme. You might have heard about it. Through this scheme, we buy gas. Anybody produces biogas in India, GAIL has a scheme wherein we buy that gas and we sell it to local city gas distribution company. So more than 80 tripartite agreements we have signed with city gas companies, and in last 1 year, the volume of biogas has grown almost by 7-8 times. Although the numbers are low, the base is small, but still we are the market leaders in biogas marketing. Apart from that, we have a target to set up almost 26 plants within a few years, and we have also formed a JV with one of the companies. If we come to hydrogen, we have already tested hydrogen blending in one of the JVs, and the best thing about gas is that it is, if in case in future any company wants to switch over to renewables like LNG, bio-LNG or biogas or hydrogen or green ammonia or syngas or whatever options they want to choose, the natural gas pipeline will be very useful to them. So that is what is one of the reasons why many industries which are planning to become future ready, they find that it is better to switch to gas now, so that in future they'll be able to switch to any of these fuels, including of course natural gas, whenever it is the technology is such that the cost effectiveness is there. And also we are setting up one 10 megawatt electrolyzer for production of hydrogen in Vijaypur. So that is there. Apart from this, in renewable energy, GAIL's total installed RE capacity is 118 megawatt in wind and 14 megawatt in solar power. And apart from that, we have a target of almost 1 gigawatt by 2025 and 3 gigawatt renewable energy installed capacity by 2030. There are ongoing 2.64 megawatt rooftop solar plants at Pata and 1.8 megawatt ground mounted solar plant at Vijaypur. 3 megawatt capacity solar rooftop plants are also being installed in various stations. Now coming to the next part, which is small scale LNG. We have been pioneer of that in India. We already have installed 2 small scale LNG plants in Vijaypur. We have also signed an MOU with Galileo for manufacturing of skid in India. The truck loading facility at Dabhol, and so there are 2 truck loading bays, etc. And apart from this, for small scale LNG, we are also planning a pilot project very soon for biogas. So all those places where the distance is more than 75 kilometers, and if the volume is more than a certain amount, then we are planning to start a pilot project. So that is also, we have requested MOPNG to give permission for that. The LNG and CNG in transportation, promotion of gas in heavy transport, mining, etc. Pilot project has been executed on dual fuel LNG in mining, LNG, CNG dispensing stations at Nasik, Savroli, Ajmer, Mandideep, Bhubaneswar, Cuttack. So basically the ecosystem for LNG in LNG is being made, and CNG infra in Varanasi has been also very special because we converted a lot of boats to CNG. Almost 738 boats are running on CNG. Then I also wanted to tell you all that about the energy security. We have recently secured some volumes from across the world. From Vitol, we have signed a 1 MMTPA agreement from 2026 onwards till 2036. We also signed an agreement for 0.53 MMTPA volume at NOG USA till 36 again. And as I said that the Qatar Energy and PLL agreement renewal has been already done, and we have chartered a long-term vessel, Gail Urja, which is scheduled to be delivered soon. So these are various activities which GAIL has done for ensuring the energy security. So that's all from us. These are the touch points for our further communication. Thank you all.
Thank you. Thank you for taking us through the key highlights as well as the key initiative that GAIL intends to take. Ladies and gentlemen, the floor is open for Q&A. My one request, as you ask the question, I would request to pronounce your name and the organization that you represent while asking the question. Over to you.
Yeah, my name is Nitin from InnoQuest Advisors. Can you share whatever last initiatives you shared, about 1,000 crore, where we are putting money in next 3 to 5 years, and what are the, because majority of the revenues will start flowing after 26. So when do we see the revenue flowing in number? What are the expected numbers from beyond 26? Major will be like electrolyzers and green hydrogen related initiative, Qatar and other things.
No. You want to know where we are incurring capex in coming 3 years?
Yeah, coming 3 years for next 25, 26, 27, where we are spending for the new initiatives.
Okay, new initiatives.
Yeah.
So currently, as my colleague has informed, that new initiative includes one of the initiatives, hydrogen. So as on date, we are putting only the pilot plant. That is 10 megawatt PEM-based technology, 4.3 metric ton of hydrogen production every day. So this we are since putting as a pilot plant, and then we will see what are the economics and where from demands are. So then we'll take it forward. So as on date, there is no definitive capex plan for this initiative. Renewable energy, he said, but renewable energy we will not say as an initiative. This is our stated statement that we have planned to invest in renewable energy up to 3 gigawatts by 2030, and we plan to invest by 1 gigawatt by 2025. We have been taking lot of initiative in this regard. We are looking for opportunities for acquisitions of already existing assets. We are evaluating where we feel that it meets our stated statement, and also the commercials are viable. We are also looking for putting up greenfield project on our own. A small scale LNG, he has said, it's not a kind of new energy. It's actually, we are putting 2 plants to take the gas or take the gas from where pipeline is not accessible, gas are not transportable. There we have an intent to invest more. What we have done, we have commissioned these 2, and now based on the assessment of requirement, where are gas available, as I said, the isolated fields, so that we will see that those gas can be monetized and how, at what price available, because since those gas are not, we are able to take it. Secondly, where we can take those gases, where pipelines are not accessible. So we have planned certainly to invest. Those are not very heavy investment considering the size of GAIL, because 2 plants we have invested almost 150 crore, 75 crore rupees each. So we will certainly look forward for an opportunity in this area and do that. I think these are the 2 new initiatives you said, and anything else you want to add?
Something on Qatar ADNOC, if you can share something more.
Yes, I think my colleague director marketing will be better person to share on that.
These are not new initiatives. New initiatives, you know, we are also like people who are putting their foot in this business area, and like many others, we don't know how hydrogen will pan out. Nobody knows, in fact. Renewables is our necessity, as my director of finance told. We will definitely invest in that. The Qatar and ADNOC, they are new LNG sourcing. We have added about 10 million cubic meter of gas to our portfolio, about 8 million cubic meter of gas, I think, which will start in next 4 years. Definitely in 4 years, maybe in 3 years also. And this is basically for our cash cow, the gas business. So there directly the revenue will increase, the profitability will increase, because the volumes that we are planning to, you know, add some more LNG sourcing in our portfolio, so that the gas volume grows and we maintain our market share or even exceed it, both in marketing as well as in transmission.
My name is Andre Purushottam. We are part of Cogito Advisors, which is the family office which my wife Sangeeta and I do, and we invest in equity in the Indian market. I have 2 questions. One is relating to an elaboration of the global outlook on natural gas, right? Now, my limited understanding of this business is that the demand in India is very price elastic, right? So it is both elastic to the price of gas and relative to other liquid hydrocarbons. Now, if the supply-demand situation in the global scenario is such that America and maybe Qatar possibly is going to increase supply of gas, there are going to be more export terminals, etc. Will this lead to a substantial decrease in price of gas in terms of the next 12 months? And therefore, in that context, would your volume increase of about 10% or so thereabout that you have planned for next year appear a little conservative. So my question is really, could you, and how will the global scenario change if for any reason there is a resolution on the Ukraine-Russia conflict? How does the dynamics of this situation change?
I think we may be conservative if all these things sort out. The 10% may, become much more. The growth may be more pronounced than that. We also understand that if, based on the volume of US and Qatar, which is likely to come in the market in next 3-4 years, the market would remain, the LNG prices would remain within a range, below $10, which is whenever the prices have been stable, $8 or $9 or $10, the market in India has grown like anything. We also have a lot of business outside India. So we maintain that we should grow by more than 10% in next few years. If the prices are within range. All the geopolitics is pointing towards that. Your other question was about what if the Ukraine crisis is sorted out. It has already become a non-event now, non-issue now. It is no more an issue. Europeans have managed their supply without Russian supplies now. 140 BCM has now, I think, gone down to 30 BCM this year, and it is not impacting the total LNG market. Time has sorted out that problem.
But Europe
and the good efforts of Europeans. Sir.
Europe is not likely to resume its gas purchase from Russia, is what the understanding on the political stances. So if that gas, the Russian gas, gets diverted to countries like India, it would further increase supply, right, and therefore reduce prices.
Very unlikely that we get Russian gas through pipeline. And GAIL is a very active player in LNG market. So LNG market is, I'm not referring to any political statement about sanction and this and that, but the total LNG market is impacted by any oversupply or any undersupply. Even when one plant goes into maintenance, unscheduled maintenance, the prices shoot up $1, $2, because LNG is basically a very, not a very wide market, not a very deep market. One cargo is 3.5 TBTU or something like that. It's a lumpy volume, but the numbers are very low. As compared to crude oil, the gas trading is not so pronounced yet in the world. So any oversupply will bring down the LNG prices, which will go towards $7 or something like that. But don't forget that LNG market is a highly cyclic market. It actually behaves in a curve. So we are, since the oversupply is going to come from Qatar and from US, the market is already discounting that in the prices that you see today. 2 years ago, the prices at this time were about $20, $40, $50, $60, $70. Today the prices are at $10. The markets are already discounting that kind of scenario, that there is an oversupply. And that is why there was one problem and the prices went up by $2.50 in last 1 month.
So my second question was on the renewables. Now you talked about a 3 gigawatt ambition by 2030, right? And if you set this against the fact that India's demand in 2030 is slated to be about 900 gigawatts, my question really relates as to, are your efforts really material in this market? And why not focus on your core business of gas? What does your emphasis on renewables bring to the party, apart perhaps from efforts towards a cleaner environment, etc., and softer goals? Why are you in this business?
Main reply will be given by Director of Finance, but We have never said that we are leaving our core business of gas or we are reducing our focus on that.
No, but
it will continue to be our main business. If tomorrow we are moving towards Viksit Bharat, in 2047 we foresee ourselves as a very big company. I would not go into the figures because might be implications on that. And the volumes are also multiplying like that.
That was not my implication. My implication is, why are you in this business at all? When there's such a large business
3
to be
gigawatt,
addressed.
you said it is against 900, 3 gigawatt is not a big share. Is it worthwhile to be there?
Right.
Yeah, you are right. If we see 3 gigawatt, if we actually reach to that level, we are saying that we have is not material. But you see, we are conscious of 2-3 facts. One, that currently we are in core business, that is gas, and we also know that gas has a longer life than any other fossil fuel. Even if we go by various studies, gas has a life beyond even 2050. Till that, at least it will go on increasing. But we as a responsible organization wants to go into the alternative energy so that we can at least begin with, have experience with a small investment. That's why we are also going in hydrogen, and we make ourselves future ready when this requirement increases so much. So if you think that you are in a business which is a core business going to last for so many years, then you start efforts after say 50 years or 30 years, then you all of a sudden find that you are nowhere. So we as a responsible organization wants to have those capabilities developed with us, and when it so requires, we switch over full on.
Thank you, sir.
See, one point my Director of Finance missed. This is also a requirement for our net zero ambitions. 2035, we want to make our scope 1 and 2 zero, and scope 3 35% zero. This is an important step towards that. That figure is basically linked to that. 3 gigawatt.
Yes, sir. Yogesh here from Daulat Capital.
I'll just like to add to that see, there are renewable electrons, which is electricity, and renewable molecules. So in renewable molecules, there are two kinds of things, either liquid or gas. So liquid, already people are working on liquids, ethanol is there. But in renewable gas, CBG will be there, green hydrogen will be there, green ammonia will be there. And then, of course, there may be, at least these three things will be there. In future, some other things may also be there. So one of the main components will be renewable biogas. In that, we have, apart from investing ourselves and making, producing biogas, we have come up with a scheme where we have not done a lot of investment, but basically we have made a software, we have made a portal wherein all the producers, any producer of biogas in India can sell gas to GAIL, and we do a lot of value addition in that, and then that gas is sold to local CGD entity, and we are already market leader in that. We have more than 50%, more than 60-70% of the market share in that. So biogas. For hydrogen, already as sir said, that we have already made our plant. One plant we have made for testing. We have already in the pipelines, we have tested up to 5%, and 5% of 180 million is also a huge amount. So in future, whenever hydrogen comes, from wherever across the world we are able to procure hydrogen, or in India if green hydrogen is made, we will be making our pipelines ready for hydrogen. And then whenever green ammonia comes or whatever. So in renewable gaseous molecules, we are and we would like to remain market leader. So that's it from my side.
Yes, sir. Yogesh here from Daulat Capital. So the questions are related to the regulatory side. So recently we have seen PNGRB board member has made a statement that the GAIL's gas pipeline capacities are revised, and the new integrated tariff pipelines will be finalized soon. That's the one thing. So can you throw some light on that side? That's the one question. Second question is again, last year only the PNGRB has finalized the integrated pipeline tariff rupees 58 per MMBTU, and we are realizing little bit higher, close to 66 rupees per MMBTU. So will it get affected in a new revision? So what will be the impact? So can you throw some light on these both questions?
So our tariff was announced in March 2022 and applicable from 1st April 2023. In terms of regulatory provisions, tariffs to be revised in 3 years, and it can be revised prior to that if there are major changes in the parameters based on which tariff was revised. This can be done either on our initiation or PNGRB can take suo motu call. So when our tariff was revised, I am talking in terms of capacity. The capacity considered by PNGRB was on higher side as compared to the capacity determined by PNGRB now. I think PNGRB must have web hosted the revised capacity for integrated pipeline. The revised capacity determined by PNGRB is on lower side as compared to the capacity determined by or considered by PNGRB in tariff revision. So if tariff revision on account of capacity is done, then we have positive on that side. Second, our tariff when it was notified in March 2022 and applicable from 1st April, soon after the announcement of tariff, we submitted our grievances, our submissions that PNGRB has moderated on certain parameters, but which we are not agreeing with. And one of the significant parameter is consideration of fuel gas price, which PNGRB considered $3.61 per MMBTU. And as you know that even APM price is not $3.61 per MMBTU. And currently GAIL has no allocation of APM gas price. Third, order itself says that HPHT price can be considered for the fuel consumption, and HPHT price is around $10. So therefore that revision is actually available to us. So we soon after filed an appeal. That appeal is under consideration by PNGRB. We understand in the absence of member legal that is not processed. Meanwhile, PNGRB has issued GSPL tariff order which considered the higher price than the price given to us. So that delta is available to us. All that single factor, I am not talking of all other moderations, that single factor itself gives on NPV basis at least 7 to 8 rupees per MMBTU. I am not even talking of capacity consideration by PNGRB. Therefore, there is a positives available to us in terms of tariff revision. That is one thing. Second, the question that we are realizing 66 rupees, I think that figure is not correct. Our tariff announced by PNGR is 58 rupees 60 paise. We might be earning around 60 rupees or 59 rupees or 61 rupees, depending on quarter to quarter it changes. Sometime it can be lower also. And regulatory provisions are very clear that any risk or reward with respect to the zonal distribution of tariff remains with the entity, and this difference is coming because sometimes the volume flow of gas flow is more in the later zones, that is zone 2, zone 3, where tariff is higher. Sometimes it is lower in those areas. For example, now Dhamra has come. So Dhamra the customer on eastern side were earlier being supplied from say Dahej, now being supplied from Dhamra terminal. So the tariff we used to go at say zone 3 or zone 4 now has gone to zone 1. So these changes will continue to happen, and our tariff will to that extent vary. But to specific answer to your question, this is as per regulatory regulatory regime, it is non-adjustable. Even if it goes down, we cannot go and say you give us.
Okay, and second question again related to gas transmission volume and gas trading volume. So in last 1 year, gas transmission volume has gone up by close to 1230 mmSCMD. However, the gas trading volume has inched up by hardly 3 to 4 mmSCMD. So why? So the gap is increasing between them. So you are not able to convert the whole transmission volume, incremental transmission volume to the trading side?
It's not like that. Actually, there are some government orders, some kind of priorities which have been given by Government of India, Ministry of Petroleum and Natural Gas or Department of Fertilizer to some sort of domestic gas, some categories of domestic gas, some categories of consumers. So this question is, we are addressing this question. We are answering this question rather, but these are, like for instance, if there is an order that HPHT gas in the next bidding, CGD entities will get priority. So they book all the volume, whatever volume comes, it replaces the earlier RLNG, or there might be some incremental demand also. So that is, those volumes are bid by somebody else and are, instead of sales, they become transmission volume. So, but we are hopeful that these volumes have reached their demand, the peak of their demand. So the future growth in our marketing would also continue. To sum up, to answer your question, although the transmission figures would have increased in last 1 year, but is a result of certain kind of priorities given by different ministries to domestic volumes, which has resulted in shifting of volume from our sales to our transmission.
Even for the future guidance, you are giving us guidance of 130, 132 MMSCMD. So do we expect the same kind of a gas trading?
No, transmission has not gone down, No. Our guidance of transmission is 130 to 132 million and 140 in the year after that. The transmission, see, this natural gas is, once a customer is connected, he would continue to get gas from our pipeline. Who is selling gas is very important. We are the premium marketeer also in the country. We are the leader in that. But if there is an order that so-and-so RLNG segment customer would be replaced by, say, HTHP customer, then they get the priority. In the bidding, we can't compete. If there is 4 million cubic meter of gas on bid, all of that is booked by CGD customers, so they become the owner of that gas. They would transmit that gas through our pipeline instead of selling, buying it from us. That's the kind of shift which has happened. But the domestic gas increment in last 4-5 years of 30-35 million has almost reached its peak. So we hope the growth now would be based on RLNG, or even if on domestic, we are ready to compete if there are no priorities or so-called reservations given to a kind of category of customers.
Thanks a lot, sir.
Yeah, hi sir, this Gagan Dikshit from Elara Capital. Two questions. First, your 50% of your capex goes on this petrochemical side, I can see. So can you share some your outlook on the propane supply? That's something similar to that you have shown in of the LNG like that. That's my first question. Second question is about, you mentioned that there's lots of northeast gas is coming. That's why also you are building the infrastructure, pipeline infrastructure. So what's your view on this Guwahati-Baroni pipeline? First, about the status of it, and also what's your utilization you expect in future, support from the northeast on the supply side? That's my second question, sir.
I'll answer the second question. The pipeline is now commissioned up to Guwahati.
Yeah.
We expect the utilization to be significant in coming years because there is a refinery in that and there are many CGD entities in that pipeline. There are 2 refineries, one refinery is already functioning. The Noonmati refinery is also being connected in next few months. So next financial year it should have good utilization. The capacity of that pipeline assumed is about 2.5 million cubic meter only. About the capex,
he was asking about BPC.
No, BGPL I have answered. He was asking about...
there were. So you were asking about the propane supplies tie-up of...
Yeah. So outlook on the propane side, something like you have mentioned about the LNG that around 230 BCM LNG is coming. So any view on the propane side, how that supply environment is looking for the next 5 years?
Huh? That is our, we don't have the data presently with us. We'll send it to Elara Capital.
Yeah. And sir, my final question is about the status of the Dabhol terminal.
Dabhol terminal breakwater job is in progress. We are also, we have commissioned the truck loading facility, 2 bays are functioning. So 2 immediate projects that we are currently working on is ambient heater system in Dabhol, which will, so that when the power plant is not running, then also it can operate at 5 or 6 million ton per annum. And the second one is adding 2 more truck loading bay. In the longer run means after 1 year or 2 years, we will be working on making the capacity of this terminal at 13.5 million tons, more than 10 million tons, that is doubling it.
Okay. Yeah. Thanks also.
Hi, this is Ramesh from Nirmal Bang. Thanks a lot for the presentation. So when you're talking about this uncertainty on the gas marketing segment, where you say that the allocation of HDHP gas is limiting your potential for growth. So how do you de-risk that, and how do you expect to grow that business? So beyond FY25, you've shown a growth of around 7 million cubic meters a day. So if you take the next 3 years, assuming that, because you are dependent on the growth in LNG demand in the country, right, for gas trading. So how do we read that in terms of your achievable volume growth in gas marketing? Because if you take Reliance or ONGC, they would like to grow their business in the KG basin, right? So if that keeps growing, isn't there a risk to your marketing volume? So how do you address that issue? Because that's one of the key businesses for you.
Sorry, actually, your voice was not very clear through the microphone.
What I'm asking is...
what I understand, what you're asking is, how do you expect your growth to be there if the LNG market is so uncertain? Is it like that?
Yeah, so basically you are saying that you have a constraint in growing the marketing volume because of the allocation of HDHP gas, where you're losing out on the opportunity to market that, right?
No, so, if there is a government decision that so and so volume of this particular sector, for instance fertilizer, would be filled up by HDHP gas, we can't help it. It's a government order.
Sir, I understand that. What are you going to do for the investors? How do you grow the business?
That is what I'm telling. The LNG market is going to be very subdued in next 3-4 years, because we are expecting about 100 million tons per annum, which is about 400 million cubic meter per day of gas coming in the market in next 4 years. And if the LNG market is subdued, the growth will come. That is the experience that we have.
So beyond 26, can you assume the same kind of addition in marketing volume? So 98 to 105, that 7% growth is possible over 26?
So also the other important aspect is the kind of customers that we are connecting. We would like to inform you that out of 308 geographical areas in the country, our pipelines are near about 250, I think 250 or 230 geographical areas are near to our pipelines. Okay. So all these, hookups, we call them hookups, means they are the points where we sell gas to these districts where the demand would come. Now you would have seen in our presentation that there is a target to connect 12.5 crore domestic houses. Even if it goes to 7 crore or 8 crore, this requires 30, 40, 50 million cubic meter per day of gas. Similar is the growth that is there in CNG. These demand, they very much, even if there is even if the prices are slightly higher, these demand would come. That is our experience in the past. And not to forget about the peaking volume of gas. So our main plank of volume growth for GAIL is CGD and peaking power. Peaking power plays very important role in our gas, and the steel and other industries in that priority.
Okay, that explains it. The next question is on the housekeeping and accounting. Now you have seen an increase in depreciation and there is a capitalization of interest of around 400 crores. So in terms of your own reading of the movement in debt and the benefit from the assets capitalized, how do you see the transmission earnings going up to offset the impact of the depreciation at the EBIT level, say over the next FY25? And how are you going to recover the additional interest you'll have to charge in P&L? Because it will move from the capitalized interest to your revenue account. So if you can address these two thoughts, I'll be grateful.
Thank you. Actually, additional depreciation is arising out of primarily two regions. One, as you touched upon, that we are capitalizing additional pipelines. And second, that is for specific for this year, we have actually reviewed the residual value of our pipeline assets. We used to keep 5% value as a residual or salvage value, because when we abandon our pipeline, we will take it out and 5% will be value. So this year we reviewed that taking out the pipeline, the buried pipeline will be costlier as compared to the salvage value. Therefore, we have decided that we will not keep 5% value and we will charge it. So because of that accounting, there is an additional impact. Now coming back to again your question that we are capitalizing the new pipelines, there is a depreciation when this pipeline will start actually giving revenues. So we have capitalized the Jagdishpur-Haldia portion of the Jagdishpur-Haldia pipeline this year, and that is a significant capital expenditure done, and we have capitalized. The next year we have given our guidance that we will be actually increasing our volume from 120 to 130 to 132. That is significant increase of 10 to 12 MMSCMD. Largely that increase will come from these pipelines only, because eastern sector, as Director Marketing was telling, in respect of Baroni-Guwahati pipeline, and similarly the other leg which have been capitalized, we are having anchor customer on those lines. So you will see that at least 4 to 5 million volume, if 10 million or 12 million volume increases will come from those pipelines, and that will be significant revenue, and there will be benefit to top line and bottom line both.
So how about the interest capitalization at the PBT level, because that will also impact your increase in interest next year?
Interest, yes, interest cost will be there, no doubt, but if you are interested in amount, I don't have for those pipelines, but yes, there will be impact, but that impact is not significant, because largely we are funding through our internal generation. As you see that our borrowings are not increasing to that extent, the kind of capital expenditure we are doing. There is an impact, but not to that extent which can be cause of concern.
So one last thought in terms of your initiatives on biogas. So you are buying that at a fixed price, and you are also having a JV with TrueAlt. So in terms of your economics of sourcing the gas and placing it, because there are so many sources of gas, what is the kind of economics for the biogas, and how much of that will be in your balance sheet, and what are the terms for this TrueAlt, if you can explain?
Economics, biogas.
We cannot divulge the terms of our joint venture currently, because something is going on there with TrueAlt. But there are two ways through which we purchase gas. First one is our own plants. So in Ranchi we are making our own plant, and whatever happens in TrueAlt also will be coming to, it can be sold in two ways. Directly as a CBG station, wherein this replaces the CNG, and through our synchronization, which Mr. Agarwal was referring to, in which we buy CBG, compressed biogas, from any producer, and we supply that to the nearby or that location in situ CGD entity. So there we buy it at something like 1280 rupees or 1300 rupees, or how much is it now? 1280, no? 1290. And this through Ministry of Petroleum and Natural Gas approval, we are able to socialize that cost on the APM, non-APM volume of about 21 million cubic meter per day. That is the mechanism, you know. But it is actually the CGD entity gets it at the APM, almost the APM price only. That is the mechanism currently going on. This is done in order to promote biogas. We believe this scheme is really benefiting that biogas segment.
So you'll earn some marketing margin on that?
We are getting our normal marketing margin.
Okay, thank you very much.
Good evening, everyone. This is Shubham Shukla from Voyager Capital. I have few questions around our pipeline tariffs. So, like, when are we expecting our tariff revision to come? And second, I just want to understand the vision of PNGRB when it comes to our pipeline tariff. Is it something like windfall or something? Basically, I want to understand how the board sees it, for a trader and as well as end consumer.
First one I understood, but second I am not able to. What is the second question?
I want to understand how the board sees it, for trader and as well as for the end consumer, the overall profit sharing, the tariff hikes. I understand the difference comes from the assumption of differences in two entities based on their capex, opex, and volumes.
First question is when we are expecting tariff revision. There are two ways we are expecting our tariff revision. First, we have filed an appeal with PNGRB subsequent to the revision of tariff, and that PNGRB is seized with that matter. We understand that because of the member legal is not available, I was answering to giving the answer to the similar question. So it is very difficult for us to give any timeline, but we expect at least 6 to 9 months that should happen. Second way of tariff revision is that we approach to PNGRB because there are changes in the parameter like capacity and also the gas price. So we understand PNGRB will ask submissions from us because it is not only for our pipeline, other pipelines capacity might have been revised. So all the pipelines tariff we will be submitting. And I was also telling that in case of integrated pipeline, there is some reduction in our capacities, so positives are expected. So maybe this year we will submit our application. We are expecting that that communication will come. So that will take care. Regarding second question, if I understood you, sharing of profit and all that, so PNGRB is nowhere interested with that to come into the pricing part of it. So that's not an issue.
Okay, thank you.
Good evening, sir. This is Kirtan Mehta from BOB Capital Markets. One question on gas marketing. Out of the 6,000 crore profit nearly that we have made in FY24, could you give us a bifurcation in terms of what was from the back-to-back contract with the customers where the profit was locked in into the agreement, and what proportion was of that profit was attributable to benefiting from the market opportunities?
So we will not be able to give you the breakup from where we earned and why, but I can give you in terms of contract or quantities. So we have 14 MMTP of contract, and around 12 MMTP of contract we have signed with our downstream customers, which are all back-to-back basis, right? When I say back-to-back, we have sold crude basis, we have marketed on downstream to crude basis. If you have sourced on Henry Hub linked gas, we have also marketed on Henry Hub. So remaining 2 MMTPA or around 2 MMTPA, which we have not actually sold on back-to-back index. We have marketed every gas, whatever we have sold. We actually lock those margins also through paper trading. We look for the opportunities in the market and take index swaps. In case we have marketed Henry Hub at Brent, then we buy Brent and sell crude, and this way we are doing that. So we have largely marketed almost 12 MMTP of contract on back-to-back basis, and 2 MMTP we are actually locking our margins through trading. That's how the breakup I can give to you.
Right, sir. And in terms of FY25, when we are guiding for 4,000 crore of profit, what proportion of that is already sort of locked in at this point of time?
So when we are giving you guidance, rather now we are giving a bit upward guidance, we expect at least, I am using the word at least, 4,000 to 4,000 crore rupees of profit from marketing during this year. And when we give you guidance, we look back to our contracts, what are the back-to-back contracts, how much marketing margin is available to us, what kind of APM gas we are selling, what kind of marketing margin assures, and thirdly, when we have not sold the same index, how much marketing margin we have locked. So our guidance is based on those certainty only, and you can assume that what guidance we are giving is based on certainty, not any speculations.
Thank you, sir. The one more question was about the gas consumption demand across India. So when we are guiding for 10 to 12 MMSCMD growth for our volumes, what's your sort of the forecast for the India consumption growth for FY25 and FY26 for natural gas?
No, we have given transmission volume will increase during this
Correct,
year,
sir.
10 to 12. So, country level volume, if you have to see in a ballpark basis, we hold 70% infrastructure in the country. If we are able to increase through our network 10 to 12, you can just work it out, maybe 15 million should increase. My director marketing will correct me.
During this year we will cross, chal raha hai?
Yeah.
During this year we will cross 200 MMSCMD of annual, daily consumption in the country. If that answers your question.
So that means around again to 15 MMSCMD because 180, 85 MMSCMD.
Yeah, 185 was last
so
year.
15 again I said 15 MMSCMD.
And just to get a bit more granularity in terms of how do you expect, basically part of it will come from the ONGC's field growth in kg. So what proportion of the LNG growth that you are assuming in this forecast?
No, we see LNG has already grown. It is likely to be about 25-26 million tons. Abhi a million ton MMSCMD or bar. How much is 26 million ton, Anuj? 100. Approximately 100 or 95 million cubic meter or 100 million cubic meter of LNG will be there. That is the point.
Thank you, sir.
Yeah, hi, sir. Here.
In the interest of time, let's take that as the last question.
Yeah. Sir, when we are saying that next couple of years, 20 MMSCMD of volume, I'm Somaya from Aventus Park. So when we are saying 20 MMSCMD of volume growth next couple of years, which are the sectors? So has fertilizers, the Sindri, Baroni, Gorakhpur, has it fully ramped up? And what is the volume expectation from CGDs? If you could just break up this 20 MMSCMD into this end market, that should be helpful.
20 million cubic meter per day. The fertilizer plants that you have referred are just about, ending their teething period. So some of that demand would come from them. The average demand, if you calculate the full volume consumption divided by 365 days, so 3-4 million cubic meter would come from that. The remaining would be from other sectors, mainly from CGD entities.
Any particular industrial pocket we see as a big opportunity within this 20 MMS?
That is the analysis of CGD entities, because as very important question was raised about how do you foresee this demand to be there. So I had answered that we are near 250 geographical areas, and we are, very quickly connecting them also. Most of them are already working on getting their gas through pipeline. If a geographical area gets gas through pipeline, it's like a boon for them. Because when they get gas through cascade or through LNG mode, the costs are higher by rupees 10 per meter cube. That's a challenge that they are facing, and that is why realizing that we have been progressively connecting most geographical areas. In fact, to tell you, some of the geographical areas are approaching us for second connectivity, and we are working very expeditiously to connect, to give them second this thing also, because if there is a customer, if there is a connectivity, it would add to our transmission volume, and it would also increase the scope of my marketing volume. That is the point.
Sir, one last question from my side. So in terms of capex, so this year we are more on petchem. So from pipeline standpoint, we are almost done. Should we kind of expect pipeline capex going forward to be relatively low? That's one. And second, in terms of transmission tariff, what would be the impact of the newer pipelines on transmission tariff? Thank you.
Currently, we are still under the executing the KKMBPL pipeline, some leg of Jagdishpur Haldia pipeline, Mumbai Nagpur Jharsuguda pipeline, I said so, and Srikakulam Angul. Then we got the Gurdaspur pipeline. So we have, and then board has yesterday only sanctioned 1792 crore rupees of capex for another pipeline, C2, C3 pipeline. So we have fairly good amount of capex available to be incurred on pipeline. It's not going that like that there is no capex available. Yes, for coming 1 year we have good amount of capex on petrochemicals. So we will be incurring capex on petrochemicals. So it will be kind of a balanced situation for at least coming 2 years. This year we have incurred almost 33% on both pipeline and petrochemicals, and next year and remaining on operational capex and CGD. Next year also the situation likely to remain in similar range.
The last question was on transmission tariffs. So the newer pipelines that are coming, the Srikakulam Angul, Mumbai Jharsuguda, so what would the impact on transmission tariff going forward at a company level? That
transmission tariff has been notified or approved through a bidding route. The kind of volume we are able to get, because this pipeline is still under execution, we are now working on the customer side or locking these volumes. I think Director Marketing will be able to tell. So once the pipelines are nearing completion, we will also be tying up the customers for transporting the gas. Maybe fairly idea can be given by Director Marketing.
See, although Director Finance referred this to me in a different sense, but I would like to say we have bid for these pipelines and they are going to add to our tariff revenue. We have properly analyzed these tariff and got this approved through our different committees and put this up to our board, and then board authorized us to do these bidding. So they are, and the tariff may be in the public domain also. It will add to our revenue. As far as this pipeline is concerned, there are many steel customers, and we are some of them have signed transmission agreement. We are also now trying to conclude sales agreement with some customers. In the Srikakulam Angul or the remaining part of Jagdishpur Dhamra Haldia pipeline.
Thank you.
Well, ladies and gentlemen, thanks. On behalf of IIFL Securities, I would like to thank GAIL management for giving us an opportunity to host this event. I would also like to thank you, the investors and analysts, for attending this meeting and the active participation. If any of your questions have remained unanswered, feel free to write me or the investor relations cell of GAIL, and I'm sure they will revert ASAP. On behalf of management, I'd like to invite you to join us for the high tea, and we can continue the discussion offline. Thank you and have a great evening.
Thank you, Arsh.
Thank you.